Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, February 19th, 2025. Uh, it's still a boring market. I was really, in the morning notes, I said that I thought the FOMC minutes was going to be the catalyst for some type of move today. And really, just because we've been going nowhere, going all the way back until January 24th. And, we popped through it and it was right here. And so my take was it was either going to break through and we were going to get a big move to the upside, or the FOMC meetings were minutes were going to be bearish for the markets, and we were going to have a big drop somewhere down into this area here, this support area, either the 60.74 or down to the 60.50. The minutes came out, we got a little push to the upside on it, and that was it. This was the push side. We came down and we closed pretty much near the highs, but it doesn't, if this is going to be a breakout, I really think we would have been a lot higher. So the thing is, as long as the bulls can hold above these levels here, the 60.27, 61.21, and then really more importantly is going to be this support zone, then they can still go up. But if they cross back down, a lot of these targets and stuff, I'm not a huge Elliott wave counter. It's kind of tedious. I try to do it when we're at some kind of ending dialogue, and so I have, I subscribe to some that are really good, just so I can get an idea of where they are. And most of them have the same thing. We are either topping and heading back down before we broke through these highs, or we're going to break through and it's going to be a wave 3 to the upside. And the reason why I'm mentioning this is this doesn't really have the look or feel of a wave 3. Maybe tomorrow everything changes and they move the markets a lot higher. But the thing is that they're, I just thought that they were going to use anything that just wasn't bearish with the FOMC meeting and minutes and drive the markets higher. But that's not what's happening right now. So I'm second guessing. I'm not going to sit there and say I'm getting overly bearish or anything, but it's one of the things that just doesn't seem like it's that right. But like I said, tomorrow may change everything. So this is, obviously we broke through this. This is my upside target, the 60-80 area. Now, here's the one thing that I will say there, where I can build a case for the bears. And that's going to be that we're in a this bearish wedge right here. It's not big. It only is saying that we're going to be coming down to the 6,000 level, anywhere between here and here. But the thing is, if we come down here, the wave structure that a lot of these, the good Elliott wave counters are doing is going to be wiped out. So I'm keeping it, and the reason why I'm putting this back into play is you can see we have these bearish divergences right here. And if we take a look at the daily chart, we're pretty overbought right here. We have bearish divergences again on the daily, and we're at some resistance areas. So if the bulls can continue higher, then what I'm looking for is really a move to go somewhere up into the 68, 6180, 6200 level, where, anywhere between those, I'm not even going to say 6180 and 6200 could be the potential for an intermediate term top, because they could make it up to anywhere to the 6300. But once this top happens, and this is confirmed with what I'm looking at, as well as when I combine it with, some of the wave counters and stuff, and it's going to be an important top. It's not going to be a, just one where every dip gets bid back up again. It's going to be one of the things where people are running for the hills on it, and the bullish case that everybody's glued to will start to come into doubt. But right now that's there. But we have bearish divergences on the daily chart. We have bearish divergences on the 60-minute chart. We have bearish divergences on the 15-minute chart. Now, I don't know if they have to redo them again, but in any case, we have those right there, because you can see this is obviously a higher high. So we have the bearish divergences overbought right there, and it's really to just to keep it simple, honestly, is this is if we wake up tomorrow and the bulls are in, they're bidding up the tape in pre-market because there's really not a whole lot of news, economic news that's coming out. So I don't know what the catalyst is going to be. Now, some people are saying it's going to be NVIDIA earnings, but that's not until the 26th. And I just don't think we could stay at these levels elevated right here until the 26th. I think it's going to have to make a decision. And then when the NVIDIA earnings come out, it either spikes it up and we get up to the 6,300, or that's going to be at the top and we come back down. But again, that's all just, what I'm thinking. I was really, like I said, I thought we were going to be up once they started breaking out here. I thought they were going to close somewhere up into the 6150, 6160 level. But obviously that didn't take place. So I did all right on the trades today. We did 2,800. This was one that I put on at the end, and the reason why I put it there was I was up on the calls end of it, so I just really wanted to put some kind of protective thing out there, and I didn't want to risk that much, meaning I didn't want to go into close to the thing. So I left this open. This is like a sacrifice. I closed the other one. So we closed 28.25. All right, but it wasn't easy. I tried a new type style trade today, and I like it. It's hard to manage, especially in the room, because when it's basically taking both sides of the thing. So a market neutral trade. But once it makes the move one way or the other, what I do is I started closing out the put side of it, and any calls that I sold into the ones that I owned, and so because that trade, believe it or not, after the minutes came out and it didn't really move, was down about close to 2,200, and I'm like, oh boy. So then that's when I started just closing some stuff out. And from there, when the market kept going up like this is what gave us that gain, and I just really wanted to protect it. But I'm still feeling out this new method here, because it's really hard to put a stop on it, and it's a easier way to get involved with some kind of market direction without putting up $20,000, $30,000, $40,000 on the trade. So it's there. I think I got to tweak it here and there. I'm not sure if I'm going to. I'll put it into the room as well when I'm going to take them. But it's going to be one that I'm going to have to tell everybody you're going to have to manage these on your own, because it's really difficult. And I'll show them how I do it. Like I said, if I have the sold a call, sold 5 calls and bought 10 calls above it or below it. Basically what it is once those, once the calls that I sold start going red, you just close them out, and now you have the calls that are in the green that are going to do it. But it's hard to explain, but I like it. I just need to figure out how to manage it. And the worst part about it is, I kind of talked myself into that we were going to have a big move today, and today was a perfect condor day, just like yesterday. So it's kind of frustrating. But anyway, a break above here, and if the bulls finally get some momentum going, 61.80. If the bears can get it through this resistance right, this support right here at the 60.22, we should have a quick drop down to the 6100 level. And then really the line in the sand for the bulls are going to be this 61.93, because if they lose it, they can, there's support at 60.73. But as I said, the wave structure is going to be crossed out, and I think you're going to see a lot more selling. So nothing really new to add to anything right now. I mean, we're breaking out. It should be. I thought it was going to be higher than it is, but let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys in